What is up, everybody? 15,000 subscribers special on a YouTube channel that I accidentally grew. I initially used this channel to record and review my trades, and then one person started asking me about trading, so I just started posting things. Put up the how to read a DOM video, and then before I knew it, the fucking channel just started growing, so I just kept making content. So that is what is going on here, and I already got questions coming in, so it's just an AMA. We'll talk about whatever the fuck on this channel. Let me minimize some windows here so I can see what's up. All right, so do you know of any playlist or websites to binge through to get better at understanding auction market theory and scalping it? Not really, not particularly. I think a lot of auction market theory stuff is pretty overgeneralized. I think so understanding auction market theory, and we'll go ahead and just do this. What you got to understand is auction market theory is simply just ranges that end up just breaking out. That's it. So auction market theory, a lot of people associate it to profiles, and I brought up Sierra charts just so we could see. But a lot of people associate profiles with auction market theory, but how are profiles made? Well, they're made from ranges. You can see there's one there. They're made from different types of ranges, but if you just scroll through a price action chart, I mean, this is a 30-second chart, and just asking me questions, but other than an outside source, I wouldn't know. But as you can see right here, from here to here, there's evidently a fucking range, right? So if we drew, we would see there's a curve, a perfect curve right there. Now the thing is, if you draw this curve and you expand it any further, and I know my head's in the way, it no longer looks like a curve anymore. And I don't know if you've gone through the Nadros stuff or have looked at it, but in one of the lessons in the courses, because he uses TPO, Merritt uses time price opportunity, which is essentially a 30-minute bar chart. Like if you made a 30-minute chart right here, you would, it's the same thing as TPO. So if we go here and we just type in 30 minutes, I said if we go here and type in 30 minutes, we'll let that load up for a minute. But yeah, you can see that this profile is no longer a perfect curve because we went outside of this range and then it turned into something else because we're measuring price action that isn't a range anymore. So auction market theory is essentially just a range. So as this is loading up, we'll look at, these are 30-minute bars right here. So if we zoom way in right here, and we go to the open of Friday is right here on this red bar. If I was to draw a profile, this is what roughly the TPO would look like. You can see it's not a very good curve at all. You can see that there is volume here, and a TPO, what it does is it takes these bars and it just mushes them up because it's letters. It's a letter every 30 minutes, right? The difference between a 30-minute bar chart and TPO is it all gets mushed together on a TPO chart. Hopefully that makes sense. So it gives the illusion there's a curve, even though it's not actually measuring volume. Volume profile is just measuring ranges. This is not a good range, right? Since the open. So, but if you scroll back here, you can see there's clearly a range back here, and if we do this, you can see there's a decent looking curve there. So auction market theory really is just ranges, and it's ranges. That's it. It's ranges and ranges breaking out. So it's the price action that goes behind it. So let me actually draw this. So when you have a range, at some point the range is going to break out, right? It's going to break out and it might go to a prior range that might be back here, right? It might go inside of that. It might trade all the way through it, or it could come up to it. It could bounce off the bottom of it. We don't know. Like, how do you scalp that? Well, auction market theory is very fractal. So when you see these higher time frame curves, like on a 30-minute chart like this, um, if we go to a 3-second, you're going to see curves in here as well. Let me actually bring ES over here because it's not on this chart. So let's look at a 30 or 3-second ES chart. So how do you scalp it? Well, you're going to want to go to a smaller time frame. You can see ES up here. I know this is the close of Friday, but if we look at it, there's a curve up here roughly. It was trending up on Friday quite a bit right there. Let's see here. Right in here is a good curve, which I actually marked out. At some point, you can see the bell curve. You can see the profiles without actually needing to draw them. Like look, see, there's a curve right here. That's it. It's just a range. So what you have to understand is the price action that creates these curves. And that a lot of people don't understand this in auction market theory, and I don't see enough content on it. But I talk about in the reclaim slip video how important reclaims are. So we know that every market has reclaims get put in play. I mean, we can look at Amazon. Amazon has a shitload of reclaims. Literally every fucking market out there. Microsoft has a bunch of reclaims, right? These hard moves up, hard move down. Everywhere there's a hard move up, there could and most likely that hard move will get taken back at some point. It's all markets. And even ES, look, a hard move right here, the hard move gets taken back. So what a lot of people don't talk about is the reclaims and auction market theory, or the actual price action going on behind it. Like, how are the ranges created? What is that price action creating it? And there's these smaller micro auctions, these smaller micro ranges that are creating miniature auction zones, and those are breaking out, rearranging, and when it finds range, its value, there will be a point of control, then it breaks out again. That price action is what's creating the larger ranges on the higher time frames. So it's very fractal. There's an auction inside of a bigger auction, a smaller auction inside of a bigger auction. And there can be curves that go on for months at times. Very tricky to trade. I think the higher you go up in time framing, the harder it's going to be to trade. So if you're attempting to scalp or you want to learn how to scalp, you want to be on the smaller time frame because there's less variance for the price action to get random. Because on a higher time frame, the ranges are taller, so there's more variations of how the range can happen, right? It's like taking a bunch of Lego blocks. You can get a shitload of combinations if you have more Lego blocks. If you go down to a small time frame like this 3-second chart, there's less variations, less Lego blocks, less randomness that can potentially happen in the price action. So it's kind of the patterns, the micro ranges, trying to scalp it is going to be, I'm not going to say it's easy, but being able to read this price action is a little easier than a higher time frame due to the fact that since it's bigger, there's more probabilities of some weird random shit happening. Whereas on a smaller time frame, yeah, there's a lot of probabilities, but it's not as much as a higher time frame curve. So we know these reclaims get taken back these hard moves where you see the bars were real thin, like it ripped up here and then it rips up down, rips back down, taking it back, and then it comes in and it fills it at some point. Because somebody else is asking about reclaims, and what you got to understand is there's no curve up here. There's really no curve in this region. There's a smaller micro curve right here we can see, and I think we're gonna shrink it a little bit. So there's a little bell curve right there. That's a little range, kind of a micro auction. And what you got to understand is when a range breaks, it typically does a measured move. So, and we're going to spend some time on this because this is a great question before I get to other questions. So, a measured move is about the width of the price action. You can even do this on higher time frames like 30-minute bell curves. Again, they're just ranges, right? Auction market theory, it's just ranges. Or monthlies, whatever the body width is, roughly, when it finally break out, it typically goes the body width when it breaks out. So that's a measured move. So right here, this modified Fibonacci tool, this is 6 ticks. If it breaks out of this little range right here, it could go 6 ticks. Now it overshoots and it does double that. It does a little over 12, which sometimes they can break out and continue to run. So we have a small curve here, and if we keep stretching this, it's no longer, at this time, there is no auction up here. As I drag this curve, this is real time how the curve is building. And you can see where the dotted lines are, that's where the price action is. Now it's almost forming a range up here, you can see. And then once we get here, you can kind of see this little range here. It's not a very good one. And then this one right here. So as we stretch it to the right, now you see the building of a curve. Again, it's just ranges. So this is double distribution. You have a range here and a range here. Very small, right? Now this inner area, it goes up quite a bit actually. There's a small amount of reclaiming in this zone. And if we zoom in, we can see it. So it dumps hard right here, only 3 ticks, but they take it back. Then they take that back. Then they rip it up like 4 ticks. They take that 4 ticks back. They take that 4 ticks back, so on and so forth. They dump it here. They wick back. They don't take it back there yet. And the market takes these reclaims back. It takes these voids. And understanding this is, I always recommend the reclaim and slip video. Understanding this phenomenon helps you understand price action, because these reclaims always being filled back in, whether it rips through it or it chops through it, that's creating a range. And that's creating your auction zone, and that's creating the bell curve, because a bell curve or a TPO would not exist if the price action didn't go from the left to the right of the screen. Like a curve can exist. Because the reason you have a point of control right here is the price keeps overlapping and trading the center. Yeah, more volume can come in, making it look like that, but as the price goes up and down, it's going to cross the middle more than it's going to cross the edges. So that's typically why it starts to hump up in the middle and you get that curve shape. It's just a fucking range. And once you see ranges, then you don't really need a curve. Price doesn't typically rotate on points of controls, and if you try to trade the value areas, they can be finicky. I think it's more important to understand price action, micro price action. Where to find that, I don't know. But that's how I do it. There's a lot of things I do that I just haven't found on the internet through experience. But as you can see, this thing starts to stretch out. It goes down into this curve here. Now, what did I say about curves? Well, typically, if we zoom this back in, a profile, and I know my fucking head's in the way, all right? So this would be roughly the value zone, the 70% value area. Notice how the market comes in and it trades into it. Now, typically, it starts bouncing the edge of it. It's always going to be sloppy. Like when you're drawing lines on your chart, you have to understand how sloppy it's going to be. It almost makes it to the other side. It doesn't. Close enough, good enough. That's the way I see it. But the price drifts in. So now you can see behind my head the curve is starting to get more flat, more double distribution, and then it rips up. And to me, this would be a stop run because they're blowing out this chop walk. The market is chopping lower and lower, and this is a stop run. Something happened in stocks to contribute to that, but again, a reclaim, and they take it back. So looking at these reclaims and scalping those are really good scalps, but you want to use correlation. There's a high probability they're going to take the reclaims back. When are they going to do that? Well, it depends. The taller the reclaim is, the more likely it's not going to immediately take it back. It might start chopping above it, but at some point the reclaim gets taken back. When exactly? Well, looking at correlations boosts the just looking at the correlations and seeing multiple markets agreeing on a potential down move or up move when you're on the edge of a reclaim in ES is going to boost the probability of the reclaim working. So you can try to trade these reclaims, but like this tall one right here, you can see it starts ranging under it for fucking ages. You could get chopped up and fucked up on this. It could even rip down. So, you really want to make sure you're watching correlations, preferably stocks on a 3-second chart, the Magnificent Seven. At least that's what I do. And I need multiple stocks to agree that there could be some sort of breakout up when I'm trying to get into ES here so I can ride this reclaim. I may have actually took this trade on Friday. Yeah, I may have actually, yeah. If you guys remember on Friday, I got long right here on 27.50. So I got long here because I'm like, oh, this could be the bottom of the market. There was some higher time frame shit going on, but all the stocks started rolling. I mean, I could talk about this for fucking ever. And you can see as I draw this, the curve starts to build and build, and it continues to build. And it creates micro auction zones. Like there's a small range here, right? This is a small auction. That's a small auction right there. There's another range right here. That's another small auction. And look how perfect that bell curve is too. I mean, Jesus Christ, right? And it's this range right here. And it's within a bigger one that's panning out on the left. So this is why bigger curves are harder to trade, because you have these small auctions ebbing and flowing, and you want to attempt to time the smaller one to get into a bigger one. And you more so want to leverage correlations because ES is an index of stocks, and since there's 500 stocks in it, you want the ones with more weight, the Magnificent Seven. You want them to really start to agree and move in a direction. For me, Amazon, Microsoft, and NVIDIA turn out to be really good. Google can at times when it comes to scalping, but where do you find this information? I don't know. Let's just finish this up right here. I'll get to other questions. But as you can see, this curve starts to expand and expand, and it builds into a bigger curve. But it's comprised of all these micro auctions, and if you're not careful, you're going to get fucked up. Now, when you're scalping, you want to be, since the VIX is relatively low, you want to be going in ES for a guaranteed tick or two, which seems like it's best to trade higher time frames or bigger time frame ideas. Even on these 3-second charts, you want to potentially gun down a bigger picture idea on this 3-second chart, but scalp it. Don't try to ride it all the way to target. When I got long right here, I took off 8 contracts out of 12, somewhere in this region, and I wanted to ride it all the way to 35, and it never hit 35, and then it just puked back to me, and I had to cut the rest. A lot of times, shit just does not go to target. That's the reality of it. The expected value of the trade is always shifting. Um, this is why scalping to hold is difficult, because when you get really good at scalping and getting a few ticks immediately, if you're trying to hold, the expected value of the trade is always shifting. If I get a pair of aces in poker, it's not gonna be it's not a good hand as the game goes on, because if the flop, turn, and river cards come and I don't get any other cards, I don't get a flush or a full house or a three of a kind, and my opponents are still sitting there, well, now my aces are starting to get shitty. Just because a trade starts off as A plus doesn't mean it'll end A plus. Every time the price action ebbs and flows, um, the expected value is shifting. So these the ranges are always expanding off micro auctions, so the curves get bigger and bigger off of micro auctions. So what resources, I don't know what to tell you, but I think looking at the smaller time frame is very imperative, especially in this environment. Um, but yeah, let me get to another question. Do you think news catalyst matters, or this would directly reflect an order flow? News catalyst matters if you're talking about pre-planned shit like FOMC. So, but that's because the limits thin out. You guys probably remember in the VWAP video I talked about how order flow doesn't matter. Well, the market orders generally coming in don't matter. Yes, there's times where the limits are real, but it's more spread out than you think. So what happens is a lot of these market makers get rebates on break evens, so they get money for break even trades. And when a news catalyst hits, we all see the limits thin out. So they thin it out, but they're obligated to make a market. So when it thins out, they're getting out of the fucking way, because for some reason there's going to be a sudden increase in volume on the news catalyst. What exactly is triggering that? Why is so much volume come in right when the news catalyst hits? I don't know, but it's been happening for years. Market makers get out of the way, so you get these violent moves, which create reclaims, which eventually get taken back. So CPI, FOMC reclaims, those are opportunities. At some point, maybe in a week or a few days, you can trade back through them and hit bigger moves. But don't hold it all the way through, because it's probably not going to go all the way through. It's probably going to dip in and then bounce back and dip in and bounce back. But there can be a good momentum on those. So the market makers thin it out. They got to make a market, so they're going to take a loss on one side or the other. But the moment the market starts to range and chop, they thicken the limits back up, so they're getting back to break even quicker and sooner. Um, so I personally don't think news catalyst really matters unless it's very major, like COVID or when the Ukraine war kicked off. But the market tends to shake off shit like that a lot sooner than the economy does, because it recovered COVID well before the economy. I mean, did we really recover from COVID? So we tend to come out of these things in the market well before the economy reflects it. Um, I think if the news is major enough, like super major, and there's a fuckload of volume coming in from retail traders or hedge funds, because it is very big deal news. I mean, very big deal news. That's going to shift everything. Earnings and shit like that. Just there's a sudden shift in volume. And when that happens, a lot of the limits pull, and it creates these even more violent fucking moves, giving the illusion of a big move because of a news catalyst. But a lot of the times, the limits are just pulling out of the way. And then we end up taking those large moves back. Like when Facebook had its last earnings, it left a huge reclaim and then they took it back. Um, that happens a lot. So does it matter? I think it matters. You need to get the fuck out of the way because the market makers are getting out of the way because it's a lot of volume is going to come in, and when the volume comes in, there's less limits, so there's less shit to hold the market. Just like the COVID dump, you're talking about 16 lots per limit order in ES. That's nothing. So it took nothing to move the market down that violently. So I think it does matter, but I don't think it matters in the way a lot of people think because the market ends up going back into those reclaims and retaking a lot of that price action it created. Um, but trying to trade it and trying to go with it, sell the news or buy the news, I think that's all a load of fucking shit. You're gonna get fucked doing that. I seen a trader do that on like the last FOMC, and he got absolutely decimated, or at least his call did. I asked a question in the improvement channel the other day about the next steps after tick drills, and you mentioned reclaim drills. I've watched your flow state videos, your reclaims and slip videos, and your live trading, and was wondering if it's a specific drill with specific rules, or if it just means that I should just try to trade reclaims. Try to trade them on NQ because ES isn't putting enough of them in. Right now, at least. Let me pull up NQ. 3-second charts. You can see that NQ puts in a lot of them. So when you're looking at a 3-second chart, you want to look at a very thin. The thinner the bar is, the more that's a reclaim. See how thin it is here, and then it takes it back, and then it takes that one back. It doesn't take all of that back. Rips up, takes that back. You get one right here, here. There's smaller ones, there's bigger ones. And here you're getting a lot of little reclaims, but it's starting to overlap and fill. That's slipping at that point. Big ass reclaim. The thinner the bars, the more of a reclaim it is. Then they take it back. Sometimes they'll just chop and walk it down. I suggest trading NQ, and then I suggest looking at, just trade into them. But I also suggest looking at Amazon with NQ potentially. So if we thin out this, we'll go to Amazon. So here's Amazon. Let's kind of go around this time here, 255. So you want to make sure that Amazon has reclaims as well, which it does. Amazon on the right. This is NASDAQ on the left. NASDAQ's just going to put in more reclaims. Just try scalping into them. So let's see. Let's scroll. So you can see that Amazon pukes up right here. And when Amazon pukes up right here, you get a slight up move, this green bar right here. It's right there. So let me actually mark which one. This one right here. You can see how straight up it goes. You can see Amazon gets stuck up here. And once you see Amazon start to puke right at this time, you can attempt to get short, but it doesn't end up happening. NASDAQ ends up taking the reclaim well before Amazon does. I mean, you can try to time, there's a little reclaim here. You want to try to get them to reclaim at the same time. It's really hard to show examples unless we're on the hard right edge and it's forming over time. Let's see. There's a good reclaim here. See this one? They both kind of V out at the same time, and then you start to see Amazon ripping up. You want to try to get into it. You want them to usually work immediately, and if they're not, you need to take a tick or two. A lot of it is just bunting at it, getting a tick or two or whatever, depending on the VIX or the volatility. And then at some point you get lucky and it shoves all the way through. You don't want to necessarily hold it all the way through on the reclaims because you want it to be taking them back right away. I mean, it's a skill, dude. I can't really explain everything you need to look at. You just need to get a feel for it. But you want to try to get these two markets to hit reclaims at the same time. You want them to both have reclaims in roughly the same area. You don't want to hit at every reclaim because if you can get, or you can also leverage mean reversions. This is going to be a little more advanced. But if you notice that NASDAQ has a reclaim, so for example, NASDAQ has a reclaim below it, and then it starts compressing like this, and Amazon's in a range. Well, if there's a high chance that Amazon might mean revert here. And if Amazon mean reverts, that mean reversion could help shove NASDAQ through this reclaim. Oftentimes, one market could mean revert down while another market is breaking a range. And the mean reversion of one market coming down can force another market to break out of its range, if that makes sense. You just got to get a feel for it. Otherwise, I'd be sitting here talking about it forever and ever and then doing drills and shit. There's some drills on the coffee and stuff. But that's where I would start. Just trade into them and see what it feels like and feel what does a bad one feel like? What does it feel like when it stalls? What does it feel like when it works? What does Amazon feel like? Understanding the characteristics of the market because every market has a weird quirk to it. How do they work together? Then you can add Microsoft in the mix and then trying to get all three to align. You're going to take less trades, but you should be. If the VIX is low enough, or if the VIX sometimes we get in goofy areas where the reclaims are not being taken back. This is more advanced. But the market is uptrending and it's leaving a bunch of reclaims on the bottom end. You need to identify that's happening, and that's more advanced. To only be trading reclaims in the up direction. So you need to identify when they're taking reclaims back on both ends and when it keeps trending up or down. And you need to, again, that's more advanced. It's just going to take a lot of practice. I mean, it's like asking me, how do you hit baseballs? You're going to have to hit a fucking thousands of them before you start to feel it. But once you get good at it, because there's like years of knowledge in my head, years of experience, thousands of these trades that I simply can't download into your head in a 10-minute speech. All these nuances to it. You just practice it, and at some point, because there's edge to that. There's edge to reclaim trading because most of the time they get taken back. We see it on the charts. And since that's a high probability setup, in order to boost the probability of working out, you want other markets to correlate in that direction. And then that boosts the probability. So there's more of a guarantee it could work, at least for the next tick or two. What you have to understand is it's a lot easier to predict the next tick or two than the next 4 ticks. It's a lot easier to predict the next few seconds than the next minute or two. If we were able to predict the next 10 minutes, 5 minutes, you guys would be great at gambling in Vegas and sports betting, but we just simply can't. It's a lot easier to understand what may happen in the next few seconds. This is why I'm a huge proponent of scalping. That when you get into these things, if you know that you should be able to get into them where you might be getting a tick or two, a little more in NASDAQ, maybe 4 ticks. relatively easily. Because if I asked you all if you could sit here and get one tick a day and you had all day just to get one tick a day, a lot of you think you would be able to do that. You guys should all have the ability to sit here and wait long enough that you know you might be able to get a tick, and that's it. That's essentially what you're doing. You just keep grinding that out over and over. So it's a very high probability thing, but when it's stalling, you need to cut it for a small win or a break even. You just got to know how to fucking manage it. And managing it, that's one of the harder parts in trading, and that requires a fuckload of experience. Because if we're trading the same reclaims, I'm going to press the button slightly differently than you are. I'm going to cut it a little sooner than you might. You might start taking losses on them where I might not. So, you need to just hit enough baseballs to know what it feels like. But on that drill, you should get consistently profitable, and you could actually trade like that and make money like that, or pass combines like that. Because I think combines are going to be more geared towards this type of trading anyways. Because if you're holding trades, you got to take on heaps of risk, and then your win rate gets real low. By doing the reclaims, you should have a relatively high win rate if you get good at it. And it's going to take you hundreds of hours to get good at it. That's the reality of it, because it's a skill. So, and then right there you have edge. But again, it's going to take you time and a tremendous amount of focus, because if you get fatigued or a little sloppy, you're going to start to trade it like shit. You don't really want these on the backside. You can get fucked up. I mean, how would you trade if you had to start over again? Would you only focus on price action, slips, and correlations? Well, if I started over again, that means I don't have the knowledge I have now. So I don't know what would happen. That's a tough question to ask. Um, Reclaims, yeah, the price action on a 3-second chart, slips, reclaims. Start there, just like I've been talking this entire time about how to do these drills. That's the first. Get good at that. Sort of that market making, tick drilling, picking up small win shit. Because scalping is where most of the consistency comes in for me. Sure, there's the occasional big trade, but it's a lot more rare than we think. They start to get a little better when VIX gets higher, but when VIX is so low, and it can be low for months, we got to scalp here. But scalping really is where I would start. Price action, understanding these ranges and the reclaims, I don't know. It's tough. If I didn't know shit and I started over, I couldn't answer that. With a nice curve range, I tend to look for momentum above VPOC range with a stop loss below. With a nice curve range, I tend to look for momentum above VPOC range with a stop loss below. Is this the right thinking? Sometimes it wicks down to stop loss, only to trigger me tilting. Oh, you're kind of answering. I can't tell you if that's the right way of thinking. I have to look at the price action, and I need to. Anytime you're taking a trade above VPOC, the scenarios are so different. And then what are the correlations doing? There's some of you who aren't even using correlations, so you're kind of, in my opinion, going into it a little blind, because when I noticed ES started failing a lot of runs, it was because Russell was rotating auction processes or hitting targets itself. And when it would dump, it would prevent ES from actually getting all the way to target. I would add something in there and not NASDAQ. If you're trading ES and NASDAQ, you want something not one of those two. You want something a little different. I think Amazon and Microsoft are good ones to start off with. Volume value area, VWAP, POC, and shade of distribution are important context for using volume profiles. So there's many shades of volume profile. I think what's important is understanding the price action between the many shades of curves. So there's many shades of curves, and if you don't understand the price action behind those curves, then you can have 5 fucking bell curves and they all look like bell curves, but they could be formed on different price action. In a perfect world, a bell curve would be this type of price action, but that's not most of the time. Sometimes the bell curve is the range doing this, and then you get a bell curve here, but these two are vastly different price action. And no matter what you're doing, you're trading this price action. So if you're getting short here, you're having it not run all the way to the other side versus this type of price action. You can have curves where on trend days where it does this. And this could actually be a perfect curve. There's days like this. And if you're trying to mean revert the motherfucker, it's not working for you. Like, how do you trade that price action compared to this type of price action? The curves can look exactly the same, but formed off different fucking price action. That's what's making these things. You can have, I called it on Twitter. There was this. It was a perfect curve. You guys remember that trade? The price action did this 2 hours from the open. This was the open up here, and then it went like this. And if we look at it, that was a perfect bell curve too. I forgot what day. And then it went sideways up here, and then I shorted it, and it started dumping. And that's like, how do you trade that? That's 2 hours. 2 hours of it going up. You can't. These curves, while they look the same, don't trade the fucking same. And that's the frustrating part of it that nobody fucking teaches or shares. That's why the price action matters. Sometimes they're like this. I think on Tuesday it was like this, where it got stuck on one side. It was a perfect curve like this at this point in time. And I know when the price action embeds on one side or the other of the midpoint, there's a good chance it'll blow out, and it did. So there's many shades of curves. While the curves look the same, the price action that build the curve is not the fucking same. And you're going to have a hard time navigating a curve if you're just leaning on a curve and you're not understanding that price action that's going into it. Sell highs on volume value area, buy lows on the other side of the value area. See, it's not like that. That's not always the case. If there are curves where it fucking starts to just trend up. Sometimes curves start to fucking range expand. I mean, when I showed the example of that small curve on that 3-second chart earlier in this presentation, it starts to expand. Sometimes you can have a curve here, but as the price action, and then it goes like this, and it has a small curve, but then the price dumps, and then the curve starts to grow like this, and then it starts to build bigger right here, kind of looks like a dick, and then it starts to build it, and then it starts to build it, and then you can keep breaking out all day, and the curve just keeps growing and growing, and then before you know it, the curve is like this, and the price action can just be drifting up, breaking out, drifting up, breaking out, and then your fucking value area starts to expand taller and taller and taller. So that fucking value area, high and low, just starts moving on you. Now you can use prior value areas, prior ranges where they're not moving and they're rigid. That's, Nadro in a nutshell. Where's my fucking mouse cursor? But using an active intraday one, the value area is going to be shifting on you. I have no idea where my mouse cursor is. Oh, that's why. So that's the problem of using an intraday curve or one that's still actively being built. The value area can move up and down on you, and you can keep leaning on it, but then it keeps going against you, and then it starts expanding more and more, and then it could just be a trend up, and it looks like a curve in hindsight, but it never dumps all the way through. You can do prior value areas, prior curves, but the problem is the current price action is going to dictate how we go into that prior curve. Like if you have a prior curve that's like this, and we come down and it starts ranging under it, well, this is the current range. It's most likely going to keep mean reverting, and you can't really buy this. It could come up and mid pivot and then V flush and then blow out. And it only goes like halfway through this prior curve, and it never makes it to the prior value area. Sometimes I see them go through and then it embeds and then it blows out. I personally, for me, I think leaning on VPOCs, VWAPs, or I'm sorry, VPOCs, value areas, those lines move too much, and I think the current price action matters. And I think what we know is reclaims matter. If I can lean into a reclaim to get through it, and if I can get correlated markets to agree on that value area, or even a VWAP, even though I don't like VWAP, I said if you use it, use it. People didn't seem to fucking get 50 seconds into that video with the disclaimer saying don't let my decision sway you. But if you want to use it, make sure you have some form of correlation to agree on that bounce. If you're trying to hit a mean reversion on a curve, on a value area high or low, make sure you got correlations agreeing with it. Is there a reclaim that can help you get through it? I think understanding the price action is key, because not every curve is built the fucking same. Not every curve is built the same. Like if we look at NQ again, let's scroll to some fucking random area. You know, look right here. You have, this is a small auction process, right? So, as this is forming, yeah, you could sold it up here. But did it look like a curve at that time? Well, the blue is where the value area high is, right? You would have to wait up until this point because this isn't quite a curve yet. And notice how when it gets to here, it's never actually hitting the value area high before it blows out. There's a lot of times where it doesn't hit them, or it's wicking through it a lot. And that's hard to really gauge. Then it blows out. When it blows out, this is no longer a value area. The value area is up here. But look as it comes into it. If we look how it comes into it, let's mark out the value area. Yeah, you could have maybe bought the pullback right here. It's going to wick against you quite a bit, and that's going to be a little scary. And then it ends up making it. And that's a prior value zone. So this one, since it's an old curve, the value zone high and low is not moving, versus a intraday curve where it's moving. So is it an old value area or an older range? Because again, they're just ranges. That's moving or not moving. But the problem with this is I'd be nervous because it's a fucking reclaim. And I'm telling you, if you're wrong about this, the motherfucker could just dump in so hard and so fast that on NASDAQ especially, you could lose 100 ticks in a blink of a fucking eye. So, yeah, I mean, you could do that. But, like, here's another value area that's being formed. It looks like shit. There's your POC down there. And at this point in time is when you start to recognize it just might be a curve. Doesn't look very good. I might want to bring this up. And the problem is I can move this shit around. It's bouncing value area low there. Sure, you could potentially buy it. And then it would go up. I mean, there's times where it's going to fucking work. And then when it comes up here, you can sell it. But when you sell it up here, it never, ever goes to the other side. So what are you going to do in this situation? What specifically are you going to do in this very specific situation? You sell the high here, Well, this one goes all the way across, comes up, you sell the high again, you know, what do you do when it's not going all the way through and then it starts to compress right here? Well, probably pull it, right? And then boom, it blows out. But notice when it blows out, it never pulls back to the top of it, right? The correlations will tell us what's potentially happening right here. But not every curve is the same. The price action behind curves changes drastically. If we look at a 30-second on Friday on ES, here is ES. So let's look at an intraday curve, right? 830 is right about here. So this would be your normal RTH curve. Notice how there's a curve right here, intraday, because most people aren't doing the 3-second ones. They're going to be cleaner on 3-second. But here's your value area high and low. But look at the fucking price action. At this point, there's a curve. You know, you sell the value area high right here, but look, it only goes this far. It never goes all the way across. And then it comes up and then do you just leave that all on the table? What do you do? And you can't look at it in hindsight because you got to realize when you're selling here, you have no fucking idea what the price action is going to do. There's no way you can predict that in the next 26 minutes it's going to curve back up like that. Nobody's predicting the next 26 minutes. Because if you guys could do that, you would be great at forecasting people's fortunes and being able to sports bet. You would be really good at this. Nobody can predict like that. You'd be able to pick the Powerball numbers 26 minutes before the Powerball came on TV. But, you know, just because you have charts and all this information don't mean you know what's going to happen in the next 26 minutes because there's an element of randomness to it. So, you know, at this time when it gets up here, well, hell, value area. Notice value area is not there. Watch how the value area right above my head starts to shift up, right? See how the value area just shifts up drastically? The value area low shifts up. See how the value area just shifts all the fucking time. And the value area keeps walking up and walking up. What do you keep fucking fading that? You keep fading that as it keeps going up and up. And then before you know it, you're fucked. And you keep shorting it and it keeps going against you. You can't just lean on it. And this curve is formed off that kooky price action where it's not even chopping. It just goes down and then up. And that's an intraday curve from the open. And that's the problem with these intraday value areas is the value area just keeps moving. Do you know how I know? Because I've been fucked by that enough to know that, hey, this doesn't really work that well like that. So if you're going to do that, make sure you have something going on in the correlations. Maybe Amazon or Google or whatever, they have their own bell curves. So maybe they're breaking out. And that's going to dictate whether you should go long or short off of that motherfucker. In a bell curve, range and longs and shorts getting built up in a range. Is there a way to figure out the direction a range is going to break to determine which side is offside? Sometimes. Okay, so starting to see that more. My meta has where I trade well is ranges. Once it trends, it's tough. Okay, so there's a time. Okay, let's say ES is doing this, right? How do we know what the fuck to do on that? If we want to play the breakout. Well, Amazon might be doing this. And notice how it's leaving reclaims behind it. So it leaves a reclaim here, here, here. And this could just be getting stuck because there's times where we see Amazon or one of the Mag 7 move and ES ain't moving. Well, the moment we see Amazon start to not take its downside reclaims back, could be a sign that depending on where we are in this, let's say ES is compressing like this, it's getting tight up here, and then we're starting to see Amazon do that. Well, there's a reclaim right here, and we can try to long it here, and then hopefully Amazon pops that reclaim, and that pushes us up. And we know that this is range could do a measured move, so that's about a measured move. But also, what is Microsoft doing? Is Microsoft mean reverting? Is Microsoft breaking that mean as this is rotating? I think there's ways to identify it. I'm getting better at that because this week I've nailed some really good rotations, like on the money. We'll see how that fares and continues, but trying to know when it's going to break out, or you try to get in on the bottom of the range, but there's a problem there because that range could drift away from you. Because while you get micro ranges, you get micro trends within that 3 second, and it gets really hard to kind of gauge that. You need to make sure the correlations are there, but there's ways to know a breakout could happen as long as the correlations are there. But there's a moment where the correlations will hang out at the same time, and you're like, oh boy, it could go, and then they start all failing, and then you need to cut it fast. In the end, you're kind of just bunting at the fucking thing, trying to get that free tick or two, and sometimes you hit it just right and you get lucky and it goes. So really, I'm probing at it to see, and if it looks like it ain't gonna work, I gotta take the loss. So there's really no knowing. Sometimes there's a more guaranteed, yeah, this looks good because the price action across the stocks looks more guaranteed, or there's some higher time frame shit going on. But I think it's a case by case thing because every trade really is unique and different because the correlations are always in a different area and the price action is slightly different. You just have to go with the side that is making more consistent support or resistance. Trade the outside. Don't take the trades in the middle of the range. It's astonishing that if you say order flow doesn't matter, you'll get laughed at in some discords because they don't understand correlations. Well, I think it matters in equities, but when we review footage, and we can probably do that a little bit, potentially. I don't know. There's so many questions coming in. I'm not gonna go down that rabbit hole just yet. The there's times where limits are legit, but a lot of the times but that's the thing. Everybody can see order flow, and everybody knows that everybody can see the order flow. There's no buildup. It just goes. There's a lot of times where it just rips. And there's no rhyme or reason to it. It just rips out of nowhere. Just hundreds of contracts sweeping all this shit. There was no buildup. There's no, oh, there's a bunch of buying here. Here it goes. No, it doesn't do that anymore. It just goes. And then it dumps in just as violently. So quickly. And NQ, ES, and even Russell, a non-related market, all just rip at the same fucking time. And it's the way the stocks are moving. They all moving in different directions, and then you're going to see chop and ES, and then there's a moment where they all align, and then they all go the same way, and that's when you get the good move in ES. That's more of a probability, or NQ. And then they desync, and they're all doing this. This causes chopping in ES, NASDAQ, and then there's a brief moment where they align, and the stocks move at the same time. They're in different auction processes. Two of them might be mean reverting that have reclaims in the middle, and another one might be actively breaking out and it has a measured move. So they're all agreeing on a down move, even though they're in different processes of price action for auction theory. But the fact of the matter is they're all going the same direction. So, hell, even one could be breaking out, but it's V-flushing and coming down while the others are mean reverting, and then you get a brief down move. Then they desync again. This is why you're seeing a lot of shit just not smoothly go to target. And shit comes back because you got to track these things. It's like if you've ever raised a bunch of kittens or some shit, they keep walking away and you keep trying to put them in the middle, and then one walks out, the other one goes, and then you keep trying to put them in the middle, or puppies even, and then they keep moving. That's why the ES never just goes to target, because the stocks start to try to go their own way, but then they agree, and then you get this clean move, and then once you understand that, you start to realize that the market's not really fucking you, and the price action isn't as random as you think. It's just more elusive, and understanding why it's so elusive through the correlations, because that's what moves S&P anyways. And it's when you get these correlated moves, they just come in all the markets at the same time, and it's just, you can see NASDAQ gets stuck in a 4-tick range, and not even a one lot will hit fucking ES. And the moment it pushes up on NASDAQ a few ticks, then you see a couple of contracts hit on ES. And the moment it dumps down 8 ticks, then you see them come in at exactly the same time. It's too mechanical. This shit is coming in at so much the same time. And then if you look at Bitcoin futures, the fucking spread is moving up and down, and there's no market orders coming in. No market. Yeah, at times, but that fucking spread is moving up and down, and it ain't moving because of market orders. And that's on the CME exchange. So is NASDAQ and ES and Russell. And if you watch NASDAQ in slow motion, you'll see times where the spread pulls. So a bunch of offers cancel, and the market starts moving with no market orders on NASDAQ. And you'll see it moving just because the spread is pulling and no market orders are coming in. And if you watch Bitcoin futures, that's a better perspective of seeing what's happening in NASDAQ, but it's, instead of slowing it down, you see that perspective better. And the reason Bitcoin futures moves with no order flow is because of what? The underlying asset, the actual Bitcoin on the fucking exchange, on the actual Bitcoin exchanges or whatever, crypto exchanges. So NASDAQ and ES are moving because of the actual stocks in it. So the order flow there probably matters, is more natural, we should say, okay? Because if we look at ES, if there was a lot more natural order flow or whatever, there's a lot of times where you see ES on, especially when you start watching these small time frames like a 3-second chart. There's times where, it bids up, but not a one lot will hit the offer, and then it goes down, and it bids up, not a one lot hits. And there's just time. If there were humans or more natural order flow to it, you would see an overlap where 1 lots or 2 lots or 4 lots would be hitting above or below the spread. But on a 3-second chart, we can look at it. Let's look at a 3-second ES here. Now, the VIX has gotten higher, but right here, I mean, if you really zoom in on it, notice how it's rotating exactly to the tick in this region. If there were more humans, you would see overlap. Now, I mean, when the VIX gets higher, you start to see more of that overlap, but see how it's rotating exactly to the tick right here? It is bidding up, but not a one lot is hitting up there. You should see more overlappy wiki shit. It shouldn't be like holding to the tick like it does in some of these areas. If there was more natural or human order flows, and if you can see what this is on the DOM, because this is the offer, this is the bid. See how there's 2 bars here? So there's times where this offer gets cleared, and then this becomes the bid, and there's an offer up here a tick above. if there was more natural order flow, more human-esque traders, we would see a little bit of slop where one lots would be hitting up there, and there's nothing. It's so mechanical. And when you see NASDAQ get stuck in a 4 or 5 tick range and not even a one lot's hitting on ES until NASDAQ actually pushes out of that 4 or 5 tick range, then it comes in. There's no fucking natural order flow or humans trading in there. And I think when you do, there's limits and there is natural order flow. And I don't know if I have this picture or not. Let me try to see if I have it. Um, let me see if I have it. I don't know if I do or not, but I made that is this it? Yeah, this one right here. Um this is what you see, but this is what it really looks like. A lot the real offers will be every few ticks. This is kind of what a Bitcoin DOM looks like, but this is what real natural resting limit orders look like. The rest of these pockets are being filled in with market makers, and a lot of it is not as real as you think. It's this fucking program that's making a market, and ES, NASDAQ, or legacy markets are the highest volume traded markets. So naturally, they're going to be more filled in than like Bitcoin would be because it's spreadier and fuck. But the lesson there is, this is what the real natural order flows look like, or the real natural limits look like. Um, and a lot of it is populated with unnatural bullshit. Yeah, it actually gets traded because the market has to move because it moves with stocks, but um, a lot of the time they pull the limit orders so they take a less of a loss very quickly. And then when the market makes these micro ranges, they re-thicken the limits so they can get back to break even faster, right? So the market makers are going to take a loss. This is why they pull it so thin on FOMC or CPI. They got to be there. They're obligated to make a market. They got to put a limit there, right? They're being paid to do that. Someone's got to make the motherfucker. And they're going to take a loss on one side or the other. But it's almost like these market makers are hedging themselves by pulling it so thin that they're going to take not a very big loss when it rips on FOMC, that when it starts to chop, they re-thicken the limits up. So it's like they're almost trading more size. So they thin it to like maybe say a one lot trade, and then it rips. And then when the limits thicken back up, that's like trading 4 or 5 lots. And then they're getting back to break even and little one tick wins quicker and sooner because it thickens back up and more of their volume is trading in there. Thank you for the answer. Let's see. That's a picture of me. What do you recommend to do after a month of tick drills? The reclaim drills that I talked about earlier. Should I try and go scalping and AMT or any other exercise? The reclaim drills, you should find edge in there. You should get consistent with reclaim drills. And if you want to expand that knowledge, more power to you. If you want to start expanding that knowledge, um, and learning more auction market theory, you kind of need to understand auction market theory to better leverage reclaim drills. But like I said, I don't know where you're going to find the type of material that I preach other than what I share, because a lot of shit is vague and it's intraday auctions. It's not micro auctions. People don't ever break them down. They're doing intraday or 30-minute or higher time frame composites. As far as scalping goes and trading small micro auctions and leveraging auction market theory on the smaller level, I don't know where that information is. I think it's impossible to watch correlations on T more than 1 second chart. And these days you cannot compete algos that are doing arbitrage. So is there an edge they're using it? How can we think we can arbitrage on? I don't know. I'm doing it. It's not arbitraging necessarily. It's hitting reclaims and auction processes, and a lot of the trading lately has been picking up a tick. Edge is very small. And you have to wait very specifically. I mean, I don't. You're not. It's not that you're competing against the algos necessarily, because it's not one algo, it's many algos, and there's these little areas of edge being left in there. Um, and the ability to manage. I mean, I don't know. It's just I can do it, and I keep showing it being done on 3 second charts. Um, and it's not that you're necessarily arbitraging. It's just you're using the auction process or reclaims that are going to get taken back, and just getting it to align and attempting to manage it and just scalp it, man, like a tick or two on ES. I mean, and you can grind out a really good day on a tick or two. That's especially in lower VIX, and as the VIX gets higher, the more likely you can hit 4 tick, 8 tick moves, and the higher the VIX gets, the more likely you can hit 20 tick moves. It's just the ranges start to stretch instead of getting bracketed, and this is where you're going to get in trouble on ES. See how it's stuck in a 2 tick spread? That's where you're going to get in trouble. You need the fucking thing to be doing like this, where it's trading, 4 tick spreads on average. That's when you can start to actually get about a tick or so guaranteed. But I don't know what to tell you, man. If you don't see it, then you don't see it. But if you think the algo you can't do it, then you can't do it. So you're telling me I have edge over algos? Well, I'm fucking doing it, bro. Sit with me and watch. You've sat with me before. I'm fucking doing it. Um, yeah, it's not much. It's a tick or two. And sometimes the trading is sloppy. Sometimes I have problems, right? It's not that you have it. The edge is small. The edge is very small. The edge is super small. The edge is knowing the next tick and getting really good at knowing where you might get another tick and being able to get filled on it. And if the VIX is higher, it gets easier to get a tick. I mean, let me ask you this. If you sat here all fucking day and I said pick up 1 tick, 1 fucking tick, you have 5, 6 hours to pick up 1 guaranteed tick. I guarantee you would be able to sit here long enough to find a free tick every day, assuming you don't get fatigued or get sloppy or stupid. If you stayed focused and you got really good at picking up just 1 tick a day, you would be able to find that opportunity. But I don't know what to tell you, man. It reclaims get taken back. We see them get taken back all the fucking time. And getting markets to move together. Because when the markets move out together, they move out together. When a range breaks and another one's mean reverting, they move out together. Getting shit to move together increases the probability. There's no guarantee of it actually working. But if it doesn't work, you got to cut it fast. I mean, if you think that the algos have taken all the edge, the market fucking moves. The markets move. They move plenty. And as long as the markets are moving, there's going to be some way to get into that and make money. It's just not as much as you fucking think. It's not tens of points. picking up small scalps, a tick or two. As I know that's not sexy, but leveraging higher time frame ideas and taking a tick or two. So, what's the simplest way to define what a slip is? Is it just it's the same thing as so a reclaim would be like this. So a reclaim would be like that. And then a slip would be if they start taking that reclaim back multiple times. So a reclaim is a piece of price action where it goes up hard once, and then so that started off as a reclaim, and then when they keep reclaiming that same reclaim zone, it starts to slip. When VIX gets higher, you start to see micro ranges slip in the middle real hard. You start to see these maybe 8 tickers, and the middle is like moving really fast. And it's creating a bunch of little reclaims in there. It's just the multiple reclaims on top of each other. I think correlations is like some fulfilling prophecy. Sometimes it works, sometimes it does not. It works. It works. But yeah, you're right. Sometimes it doesn't. So how are you gonna fucking manage it? I mean, it seems like you're a little negative on trading in general. So, I mean, with that sort of pessimism and skewed outlook and not actually watching what the fuck's going on, of course, if you're that skeptical about it, don't trade. What about other futures markets like crude, nat gas? I don't know anything about those. Yeah, I've done tick strike before and it doesn't work very well. It's just sound, and the thing is, I've leveraged correlations in the past and they fucking sucked until I started seeing my ES setups work in the other markets, and that's when it worked for me. So you can use correlations in ways that make no sense and don't work. Um, but if you can get these reclaims to agree on multiple markets, there's a high probability it will work and you can at least get a free tick or two in ES. But you need to be fast and there's a skill to it. It's not like it's going to work every fucking time. If you just sit there and freeze and get blown out, you're fucked. I don't think you need correlations for trading. That's fine. I used to not use them, but when I used them, it just made my trading better. So well, that's the problem with auction market theory is how do we know if that range is truly going to mean revert? We looked at several curves and how the price action is completely different in all of those curves. Okay, because again, auction market theory is just ranges breaking out and then rearranging or going to a prior range. You can absolutely do it standalone. I've done it too. But the moment I leveraged correlations, it just made my trading better. That's it, man. That's it. You don't have to use this shit. I swing traded Apple a few weeks ago with no correlations, and it worked just on Apple auction market theory. I think you can get away with more standalone auction market theory trading in stocks, but the problem is ES is just being influenced by the stocks. What else did I do? I think I did. I did another. Actually, just last week I scalped Apple on an auction process of a breakout of a range with no correlations. Well, I would say, yeah, there was a bit of correlations because I'm like, Microsoft could dump and shit. But on one swing trade, I held Apple for a few days. It was just a pure Apple play because it was like a month of ranging and it was actively breaking out. I'm like, this is going to sustain a breakout for a little longer, so I don't need it. I mean, I agree, but the thing is, for me personally, And that's what people are doing, is here to listen to what I have to say. Is correlations boosted the probability of, it just made my trading better. It just did. So let's see. We got a fuckload of other questions coming in here. Kind of a dumb question. What's the use of drawing a volume profile on a small range? Well, it's just to show you that a volume profile is a range is a volume profile. Uh, the thing about it is auction market theory. A lot of people think auction market theory has a lot to do with these curves and TPOs, but once you understand that curves and TPOs are just ranges, and if you can understand the range, you don't really need to draw a curve all the time to understand that. I mean, it's kind of going against the grain of what a lot of people have learned, been taught, but I've drawn thousands of fucking curves. And then I just start to be like, I know there's a bell curve here without drawing it. Because the problem is, if you do an intraday, if you're letting your curve be drawn intraday at the open every session, it could be double distribution a lot of the times. So let's see here. If we look, what's another session here? Let's go to here and just see what this is. So here's 830-ish. So there's a beautiful curve there, but you already can tell because there's a range behind that. But look as the day pans out. Well, it's two distribution zones. So the value area here is lying. This isn't the value area high, right? That's like a POC because there's another range up there. So really the value area would be more so down here because that's where this lower curve is because of this range. And you can see how it's mean reverting down here a lot. So if you're going to be leveraging a value area, you need to leverage it on the range, not the fuck up here, because now it's two different distribution zones because it's two different ranges and two different areas. But if you let your curve pan out over the RTH session, the value areas aren't right. And then now it's starting to meld and mesh into one curve at this point. But we know there's a smaller distribution zone back here. We know there's a smaller distribution zone back here. And, if you want to trade a prior value area, look how it fails it once, twice, 3 times, starts to pin up against it, failing it again, and then it finally goes. Well, all this failure right here happens to be another fucking auction process in itself, as you can see. And then if you just expand it, then that's what it looks like. But what you got to understand is, how do I leverage these smaller ranges, which this one has a reclaim on? Like, look at this range right here. All these reclaims get taken back. Like this puke here, they take it back. This thing rips up. They don't take all of it back. They drift it down. This one pukes. They take it back. Then it dumps again. Then they take it back. They dumps it again. And then it kind of walks up through it. So at some point, they're always taking reclaims back. And this is where the correlation, thing really helps get into the reclaim. If you're using tick strike it just depends how you're using correlations. I could never get correlations to work until I started to use it one specific way. And it's the way that I share now. But I tried it in so many different ways, and I'm like, this shit sucks. I even made a video where I'm like, correlations are bullshit. But once I started to see how, from a different perspective, a different angle, I'm like, oh, fuck, it actually works pretty well when you look at it from this perspective. But if you're using tick strike or any of that other fucking shit, I could never get tick strike to work. When the markets are all ripping at the same time, it's too late anyways. I feel like you need to be in it before the move happens, but you're trying to trade this prior value area behind my head. The fucking market is just ranging right here. You can see this range. Well, what the fuck is going on in the stocks? Yeah, you could use this standalone if you really wanted to. I'd be a little nervous because you do have this here, that reclaim, but then it does. This is a slip right here. Do you see how it's Ving? We can actually zoom in. It's ripping really hard, multiple directions right here. See, it rips up, rips down, rips up, rips down, rips up. That's slipping in the middle, so you can lean on that. But I mean, look at this prior value area. That's a pretty good curve, but look how much drama you're dealing with attempting to get it to go in and across. Like, these things don't always trade very smooth. So you need to look at the current price action, which is this. There's currently a range here. And in order for it to go across this other prior range, well, you know, you don't want to be hitting the breakout up here because you're going to get mean reverted on, because this is its own auction process. This is the current auction. This is just some old shit. And I do trade these. I do leverage those. But you want to focus on the current price action, because that all this old crap don't really matter in light to what's happening right the fuck now, because what's happening here is going to dictate whether we get through that or not. So if you're trying to trade a VWAP or some shit, because it's a trigger, that's fine. But you need to leverage what the fuck is happening now and realize, hey, there's a range here. How the fuck can I get into this? And the thing is, you know, what day is this? 5:30? We could probably look at, you know, let's look at like Amazon on 5:30 at, what is that, Russ? Let's just kind of look at it, you know? So we got ES. I fucked it up because I scrolled it back so much. 5:30. Right. Ah, here it is. We're looking at this time at 11. So Amazon, 5:30 at 11. So let's take a look. So we're looking at what specific time? 11:29. So 11:29 right here. Okay, so if we look at Amazon, there's a range. You can actively see it. If you draw a curve on equities, they look like shit every fucking time. This one looks decent, but they get these really massive volume spikes. But we can say at 11:29, which is right here. It's at this point in time, we know there's a fucking range. I know there's a fucking curve here at this point in time. I don't need to draw it to know, right? So let's look at them at the same time. So ES, Amazon, we'll expand these, right? Zoom in on them. So we know we're near the bottom of a range on Amazon. So notice Amazon right here. Big fucking reclaim. Has a little bit back here as well. Starts to get real tight. ES hits right here. And then fucking Amazon pulls back. You need to look at it from the hard right edge. Notice it leaves a little bit of reclaim below as it rotates right here. Where's ES at this time? ES is starting to get near the top of the range. So I know there's more reclaim up here. And what I could attempt to do, I mean, hopefully we could see what Microsoft and NVIDIA are doing. You know, the fact of the matter is there's a reclaim here, and attempting to, you know, maybe it stalls here, and I'm like, I'm going to take the Amazon reclaim as we're kind of at the bottom of a range here on ES. Let me move it. I mean, this is kind of where you got to manage it. I know I'm at the potential bottom of a range here. Amazon stalling here. There's reclaim above, really good reclaim too. So I can try to hit it. If it ain't working, I need to cut it pretty quick. And then sometimes you get lucky and it just pops, and then ES pops, right? But the problem is then, fucking Amazon starts to just float sideways. Is it going to dump or not? And then ES starts to float sideways. Is it going to actually get all the way across? This is where the expected value of the trade is shifting every second. And all I want to be good at is like just predicting the next second or two, which is a lot easier than the next fucking this giant move here. And at some point, as the cards hit the table, the price action unfolds across these correlations. I hold it. Sometimes things get ugly and I gotta cut it. I mean, you just have to actively be watching the price action. Because there could be a chance Amazon hits up here, doesn't take this reclaim, and then pukes. And when that happens, I need to take a small loss right here. However, the fact of the matter is this prior value area, if it failed right here, this prior value area had been hit a lot. It'd been hit here, it'd been rotated here, here, here. It's gone halfway through. That if it does come back in, the more something gets tested, the better the odds of it actually going all the way through are. But I need to watch those correlations. And as you can see, I'm trying to trade a PVA here. I'm trying to do a mean reversion trade here. This is actually kind of a bottom tick in this region. And it does have reclaim on ES right there. And I'm leveraging an Amazon reclaim, and it's kind of near the value area low of a major range at this point. So at this point, you are value area low right here with good reclaiming. So Amazon's near the bottom of a range. It has reclaiming up, and then ES is near the bottom of this micro range, and it also has reclaim up. I know that's a lot to digest. I know that's a lot of information. And until you fully grasp what the fuck I'm saying, then it ain't gonna make sense. Like I'm the magician who's pulling a rabbit out of the hat, and it looks like magic, or it doesn't make sense. But the moment you realize that that wasn't magic and what this is, then just reading the order flow, like words in a book or a poker player. As the cards are hitting the table, my aces are changing. And there are times correlations don't work. You cut it fucking fast. Because there is an element of luck. But I want to be good at predicting the next tick. And a lot of the times I'm just picking up the next tick or two. And then occasionally I get lucky and get that instant pop. Now, if everything looks really solid across multiple markets, which is very rare or it's not that often, we've had a few this week, then I'll hold a trade. What was it, Thursday? All this talk fucking killing me. Thursday I posted this before it dropped because I realized what was happening from an auction theory standpoint. And I got short up here. Won against me 15 ticks. But then all of a sudden that happened. How the fuck did I know that? How the fuck? It looks like ES is breaking out from an auction theory standpoint. But to me, this is a giant range. And when I showed you the many shades of profiles, this is a giant curve. And it spent, here's the open, and it spent 2 hours going down and 2 hours coming up. This ain't an uptrend day. I've seen this type of pattern before many times. That if we make this V shape and we drift from the open for multiple hours and then come back to it like 4 hours later, typically it dumps, and you have to view this as one giant bell curve, as one giant range, but it's comprised of micro auctions. But also what was happening up here in this region was the stocks were gearing up for major moves. Microsoft had a major Microsoft at this point in time, high time frame too on a 30-second, so pretty high time frame. And what we were just looking at was high time frame. Microsoft was doing one of these. So it was a perfect bell curve on Microsoft. But if you get one of these bell curves where the point of control is down the middle, but most of the price action is on one side or the other, and it's spending several hours on one side of the curve, like you can get these perfect bell curves, but the price action will just stay on one side or the other. That's why trying to trade it from one side to the other doesn't work very well, because there's times where it gets stuck for multiple hours on just one edge. Typically when it does that, I know it could break through and go to the other side. And then Amazon also had a high time frame curve that was compressing and getting ready to break out too. So Amazon and Microsoft both were in their auction processes where Microsoft was getting ready to mean revert to the bottom and Amazon was getting ready to break low. So that gave me the confidence to sit, and I think I got in right around here. And it wicked against me a top tick. I was getting ready to cut it for a loss. But then I just kind of watched the stocks because, when it comes up here, it don't look good. So how did I know to hold that? Well, Microsoft and Amazon are getting ready to fucking roll. Now, could it have failed and ES started walking up? Yeah, absolutely. But due to the nature of how it all came together, I'm like, fuck, this might be a good trade. And there is an element of luck to it, and pulled 43 ticks on it. And then if you look at the rest of this day, it kept going. In the coffee and even on the Discord, I told everybody there's a good chance it might come here. And I don't ever get confident in a trade that big, but it was the correlations that helped me get it through. It was the correlations that had me, that why I held it when it was wicking up here. Because I'm like, dude, they're all just geared up to go down. And I've seen this in ES too. Like, you could take this trade without correlations, but I like having confidence to hold something. Let's see what else we got here. Some of your comments on YouTube are old. What is your personal definition of scalping? Ticks points. What is the target amount? It depends on VIX. So I'm marking out VIX in different areas to see where I can get where it's going to be hard to, like, just watching VIX on a 30-second chart. Because if it's in a certain area, I know I can get 4 to 8 ticks easy. And then if it gets too low, then it's like it can be so low that I can't even get a fucking tick. So it depends on where VIX is. If VIX is pretty low, then I'm only getting a tick. But if it starts to get higher, which it had on Friday, now I'm able to get bigger trades. So it just depends where VIX is. If it's like VIX 20, I can get, 4, 8 tickers, no problem. And people are able to hold trades. There's more volume. Price action, in my opinion, is a little cleaner. The ranges are taller. So it depends where VIX is, how low the volatility is. It can be anywhere from grinding just a tick to consistently getting a point or two. It just depends on how much volatility is coming in. Because earlier in the week or even last week, you're not even able to get in and out on a tick at certain points. You're not even able to get in and fucking out. That's how bad it can be. So I have to really be patient and really hit the most high probability shit. And don't even push it beyond a tick, because it will go. In this environment, when the VIX is so low, You can get a free tick, but if you're wrong, there's a lot of times where the market just walks away from you and it never wicks back near your entry to get a break even or a smaller loss. It just will keep pressing against you by a lot. So when the VIX is low, it's really hard to be right and it's very easy to be wrong. Whereas when it gets higher, you're getting more slop, so it's easier to get break evens or a 4-tick win. So it just depends how much volatility is fucking coming in. I mean, the more people playing the game, the easier it is. So it just depends, man. And then I typically don't want to sit here for more than 2 hours at a time because you can be such a good trader, but once fatigue kicks in, you're fucked. What does it take to truly make it consistent? Yeah, fucking a half a decade of sitting here and just not giving up. And then getting your mental game under control. You just have to, I don't know, dude. I think it really depends on your psyche. If you bitch, moan, and complain about shit all the time and you don't have a winner's mindset about it, you're not going to make it. There's something called the winner's mindset. People who start to win, and they've done this with like lab rats, where they drug up one rat to where it's a little woozy, and then the other rat, and they make it the other rat sober. They make them fight, and obviously the sober one wins. And the next time the rat who's not drugged up goes against the other one, and they're both sober, well, the one that already won starts to win again because it starts to gain this confidence, so it continues to win. There's a lot of mental conditioning that goes into this that I talk about in these videos that a lot of traders don't put a lot of emphasis in. There's a lot of hypnosis, meditation, visualizing, looking at my fuck ups, looking at what's working. I've recently hypnotized myself to be more aggressive in scalping because I was just holding too many things that were imploding on me, and it was maddening. Um, I mean, there's been recent weeks within the last month or so. I mean, this last week was really, really good. But there's been some weeks where I'm just struggling or some fucking shit. We're able to pull it off, but it ain't fucking easy because the VIX is low and I'm trying to push trades and it's like, fuck. When I review it, I'm like, I should have just scalped the ticks. So conditioning myself to um, just take scalps and to brainwash myself into being a pure scalper. And just being aggressive and not hanging out, not freezing up, mentally rehearsing a lot of this shit. It's the mental aspect of it, the mental rehearsal, the awareness in a session. Am I getting pissed? Am I fatigued? I need to get the fuck out because a lot of traders sit here for too long and you're almost drunk trading. Where you're just taking trades to take trades and you're just not performing well, or you get sloppy and you give up and you're like, because it can get so frustrating. Like yesterday wasn't frustrating. So I ground out a few wins and then I went kind of retard mode and I gave it all back and I was down like 1,000, 1,200. And then it took a lot of grinding to get that back. I'm like, what the fuck did I do? There's just times where the P&L, I'm chopping break even and then like 25 fucking trades or 15 trades in, I finally hit it and then I'm good. I mean, just being mentally prepared for these situations, being mentally prepared for you're going to have crazy P&L swings at times. Sometimes you're all over break even and then the last few trades works. Sometimes it works immediately. Sometimes, the equity curve is real smooth. You can't let that fuck with you. And then at this point, I just have the confidence. Like yesterday, I kind of got a little retarded and I'm like, we ended up making $1,900 and walking away after commissions yesterday. But um, I got a little dumb at one point, being down 1,200. I'm like, dude, I can get this back. And it's just this confidence, this winner's mindset. And if you're pessimistic and you don't think things work and you don't have an open mind, you don't think this or that works. Like, yeah, I made a video on VWAP, and, I've made videos on correlations where I thought they were shit, then I changed my mind. If somebody can logically explain these things and break it down, I'm open to looking at it. But I'm obviously going to have my biases and shit. But you don't want to be so pessimistic thinking the algos are out to fuck you. There is no opportunity. Because if you think like that, then there is no opportunity. You can't. You're just gonna see a bunch of bullshit happen. You're just gonna see bullshit happening all the time. You're gonna get more mad. But when you feel good, you're happy. You're not in fight or flight mode. The blood is rushing to different parts of your brain, because when you go into fight or flight mode and you're pissed and you're upset, you're in fight or flight mode. You can't make rational, logical decisions anymore. You're in an emotional state. So really, it's a lot of just mental conditioning. I mean, the amount of mental conditioning that goes on behind the scenes is tremendous. And I think that's where it is. There's no fixing tilt. People often ask, how do you fix tilt in the middle of a set? No, it's all the fucking back end shit you're doing. And your growth as a trader is so slow. It's like, plants grow, right? It's like watching a tree grow from a seedling. You can sit there and stare at it, and it doesn't look like it did shit for an hour. You can sit there and stare at it for a day, and it doesn't look like it grew. Your growth as a trader is like a tree growing. It's so fucking slow. But as long as you're embracing the fail, I mean, David Goggins talks about it. If you're going to do something hard, which this is, you got to embrace the failure. And it's embracing the failure. My biggest fuck ups, I will just go through with a fine tooth comb, and a lot of traders will just walk away from that and not even look at it. I'm guilty at not looking at good days. I'll say that. I used to. But a lot of traders don't look at the bad days. I will sit there and figure out exactly how I fucked up. And then the next day, I don't make that mistake. And when I fuck up, I'm like, this is good because I can learn from it at this point instead of fuck. Yeah, I'll feel like shit. I think about a month or so ago, I lost $6,000, which is a fuckload. I just lost too much. And then I realized how fucking stupid I was. I had reclaims on the back end. I was trying to hit a higher time frame trade that didn't exist anymore. It just wasn't there. It took, but what was, I mean, it took 3 days to get it back. And then I ended up having a really good week. And I was surprised it took 3 days. I was prepared to spend a week on it, getting it back, and I was content with it. And I do a lot of visualizations where I'm just content with the outcome no matter what. If I miss a trade, I'm okay with it. If I took a loss, I'm okay with it. Yeah, I do hit points of tilt or get frustrated. I'm not perfect, but I'm always inching my way towards perfection. And it's just compounded over time. You plant the tree 7 years ago, because I'm almost 8 years into this come October. Well, in 8 years, that little seedling definitely looks like a fucking tree. And I really think this is going to take you guys 4-7 years to fucking actually get it. But what are you really doing? Because, for instance, when I was in high school, I in algebra, in ninth grade in algebra and English, I sat in class with everybody else. The teacher said a bunch of words that everybody else heard. Most people in that class passed those two classes. I failed. And then I had to do summer school. Well, second semester, my mom put me on kid meth, fucking Adderall. And then I passed. But the thing is, I think focus is a skill set. I think deep focus is a skill set. And we just don't live in a society where focus is really a thing, because people can't handle long form content. Some people can. I love it. But focus is a skill. And there's a lot of times where people can be sitting here for years And it's like me sitting in a class where I'm not hearing shit, I'm not getting better, I'm not doing my homework, and you just wasted 5 years of your fucking life. So really actively looking at yourself, you have to take accountability for your own actions. Everything that happens in trading is your fucking fault. How can I get better? And if you think it's this, that, this guy's fucking program doesn't work, fucking algos are out to get me, this is bullshit, this ain't gonna work, or this doesn't. It's all this stuff, but yourself with that type of mindset, you're not gonna be able to do it. You have to take accountability for your own actions. How can I be better? Where did I fuck up? And some people have too big of pride and ego to realize they fucked up. What can I do to get better? And it's constantly analyzing yourself. You have to be really good at self-diagnosing your problems, which a lot of you guys aren't good at. You're like, oh, I always get tilted. Where specifically? Like when we look at the trading and all the stuff I showed at the beginning of this video, it was so nuanced and detailed. The devil is in the details. And when you're having these psychological issues and you're just like, oh, I tilt and FOMO is not a one size fits all. What specifically happened? And you got to really get into the guts of it and then create very specific solutions to fix very specific problems. Like maybe my car is broke down. Oh, it's broke down. What exactly is broken down? Oh, it won't start. What won't start on it? Well, now we got to start diagnosing. Is it the starter? Is it the battery? Is it fuel? Is it spark? And then we got to go through all of these things to figure out what specifically is wrong with it, to find the specific part, to fix the specific problem, to get it to start. Because a vehicle not starting is not a one thing problem. It could be many things. And as we get into the diagnosis, we can find specific solutions. And you guys got to find shit that you just find that works for you. And for me, that's self-hypnosis. So that's where it's at. I mean, I could show you all this shit and it doesn't matter because I'm not pressing the button for you. And you guys have this psychological shit going on. And then there's a lack of experience. There's something in experience that I can't put in your heads that you just got to do it yourself. You can watch baseball all your life, but the moment you step on that field and try to fucking hit the ball, you can't. How much do correlations play in your decision making nowadays? All the fucking time. Thanks for the love, guys. Hey, with your edge in trading markets, why do you not trade crypto? You'd beat those rooms temp IQ plebs so easy. I really don't know. I just know what I know. I've been trading ES pretty much the entire 7.5 years. That's what I know, and I don't. At that point, I just lever it like. That's just another. I don't know. I just know this market too intimately at this time. I'm going into stock. I'm starting to scalp stocks a little more. So I'm just like casually going into that realm. I always wanted to go into equities over crypto. I just don't understand crypto enough. The spreads might be big. How do I leverage correlation? Like all the knowledge and things I leverage now may not work in those fucking markets. I know crypto does reclaim, but every market has a different personality. Like I still struggle with fucking NQ because I don't trade it enough. Just knowing one fucking thing at this point so fucking intimately well that I just have a pull, like I just feel the pulse of it beating. Sometimes I can't feel it, but a lot of times I can just feel the pulse of it so well that it just makes no sense to go anywhere else at this point, other than leveraging what I use now and just evolving what I have and just branching into stocks since I'm starting to get a feel for those as well. Um, you're love the videos. They help me with crypto. Thank you. Th Thanks for your work. You actually teach a lot on the mental side of trading just by being yourself. I'm sorry if I'm missing questions. Wasn't yesterday a classic Nadra setup on NQ? We can look. See, the thing is, I need to look at TPO, but I'll take a look. Um, let's. And I'm gonna hang out with you guys for a little longer. I gotta go somewhere a little bit later, but I know. So this is 30 minutes. So we do want to look at. He uses a lot of prior value areas. So I'm not. I know I'm not using TPO, but we want to use 830 would be this green bar here. Oh, I'm not sharing. Sorry. Uh, and then you're looking at 3 my time. So that red bar there. This would be yesterday's session. That is a beautiful curve. So if we looked at it from a TPO perspective, from when I remember what he did, that's your shit. He uses prior value areas. That's a very nice curve. The motherfucker went through it clean, too. I mean, I can tell you what's going on my perspective. See this range right here? There's evidently a range down here. I'd use some of this overnight data, too. From my perspective of why this would work, you have a measured move, 43 ticks up. So 43 ticks would get us into the value area low. So as this range breaks, it puts in a measured move. That's not Nadro, but he has it up here. So you're looking at your value area right here. My shit could be a little off. Let's look at a 30-second chart. So we're looking at 60, 75, 60s. Wait, am I looking at the right fucking chart? That's a yes. My bad. Let's go to NQ. Probably roughly the same. Let's see. We're looking at, again, give it a minute. Thank you for being instrumental in shift order flow trading. Thoughts on characters in the space, ICT, smart money concepts. I have a video on trading gurus coming out, but it's not what you guys think. I've been told a lot about ICT, and a lot of his fair value gaps seem to be like my reclaims. I know people love to hate him, and I know people love him. I know people aren't, but I think there's a lot to be said in the guru video that's coming out, because the difference between a guru and you guys is just a camera, and a lot of times the advice you guys are getting within the trading community from people that aren't gurus can be just as bad um, as what a guru may say. It's really hard to say. And then also in my courses suck video, this is courses in general, not trading courses. 70% of courses aren't finished all the way through, and then what are the likelihood people are doing exactly what was taught to the T and doing it long enough to gain experience? That's like a handful of people. That's the reality of it. So it's really hard to say. And then also there's stories of prop people. You know, you go sit on a prop desk with pros, and you can't make what they're doing work for you. It's not to say you can't learn from them, but just because some guy's fucking shitting golden eggs every day don't mean you're going to be doing it, because this job is a skill, right? So there's a lot of opinions on it. I don't never looked at his stuff. I couldn't tell you. So if we're looking at NQ here, um, you're looking at right in here would be the TPO, I think. Yeah. So he would have a TPO. I don't know why this is not going correctly, but either way, the value zone on the TPO would be roughly this area. It's going to be a little different. And there was a bounce off the fucking thing. I don't know if this is what you're talking about. The bounce off the value area from yesterday. So this is the prior day because Nadro uses prior days. So that's your prior day. Perfect bounce off of it, roughly. What price is that? The camera's in the way. 51.75. Go to a 30-second. 51.75. So let's go to the prior day. Today's the 1st. There it is. There. Okay, so it's overlapping from the other chart. So this is the value area. Now we get to see the noise a little better. Well, there's evidently a range down here which bumps and pukes up. I mean, yeah, it rolls it and it's accepted below. I mean, going to the 30-minute chart, because there's another value zone here. This is the way I look at it. You see the curve? I know that's a lot of overnight data, and then I would actually probably take this range here. It's a little cleaner down here because I'm picky about my ranges. This fucker measure move out 152 ticks. The fucker double legs out. I mean, it rips so hard and it bounces it. I mean, it worked perfectly. Would I want to short that? Well, I mean, what is the stocks doing, man? That's my thing. But what I can tell you, just looking at it without stocks, you have the acceptance outside of it. That's a fact. And it is pulling back to the value. That's pretty textbook Madro. But from my perspective, you do have this reclaim. And they do take it back. Right? And then if we really zoom in, because I'll be looking at this on a 3-second chart, we can probably look at equities too. There is a little range up here. Right? There's a little curve, a little auction zone here. Do we know if they're going to stay up there and accept it? Well, it's been up there for 15 minutes. Is that long enough? This little hang time could be a bit nerve-wracking, right? Because think about it this way. We're on the hard right edge. Do we know at this point in time if it's going to go down? So we're looking at what time? Oh, this is pre-market. Unfortunately, equities does have overnight shit trading. Let's pull Amazon at that time just to see. So 754. Amazon has a fat fucking reclaim right here. You can see. And then 754 would be right about here. So Amazon doesn't look super amazing to me. I'd want to be looking at other shit. It's not quite a range. For me, at this time when NQ's hanging, Amazon's sort of just up here. But the moment Amazon puts in a good range right in this region, and then the open comes in and it starts wicking this fucking reclaim violently. It's tough. It's really tough to hindsight this shit. And then you start to get fucking NQ start to chop walk down. We know that, like, for me, I'd be looking at it like this perspective. You got to get a measured move out, 33 ticks. And if I'm trying to lean on a Nadro level, this is how I would want to chunk it down. 33 ticks is roughly in this region. But the problem is the open. It could be so foul and violent, But yeah, you could lean on it. I mean, yeah, it happened. I mean, I didn't trade it. Congratulations, thank you. Slowest growing trading channel. I'm 4 years this October scalping NQ. It's been the best thing I've done in my trading. Your content is helping me improve new levels. Good to hear. There's a lot of love that I never hear about. Miss my question, for a big server set up to trade with and analyze data in real time and later on with the backtest, what hardware I am looking for and what operating system is best? You're asking the wrong fucking guy. I'll talk about auction market theory and bar charts all day, but when it comes to some of that shit, I don't fucking know. Do you have any not too old videos on your market prep? Not really, because I tend to I for me it's good to sit here for a good 10 minutes. I kind of look at because I'm trading off the 3 second time frame a lot of the times. I'll look at the 30 second. Is there anything there? Like a big setup? If not, it looks like noise. Let's go down to the 3 second and then trade the micro auctions and then just scalping those motherfuckers. So for me to find trades, it's relatively a quicker process. But it's also important to kind of like drill it at first because there's a lot of times I'll trade and I'll get fucked and then I get my finger on the pulse. So for me, I just need to where's the 3 second auctions? How are they ebbing and flowing? Is there a 30 second auction, like a bigger range? And is there something higher time frame, 10 minute? Because most of the time there ain't shit on the 30 minute, 10 minute for me at least. Um, and I'm more so looking at equities. I do trade the auction process in ES. I do take measured moves on ES. I do take range breakouts on ES, but I need those fucking stocks to agree. And they're always shifting and changing that for me to prep for a scalp, it doesn't take very long. I mean, I could do a video on it in the future. Fun fact, ICT hears voices and get messages from gods, from God. Hang time was on pre-market. Let's see what else you guys are saying. Uh, I recently started now Nadro. However, do you recommend reading any of the Dalton's books? Um, yeah, I think it's a good idea to go through that stuff. I just do things so different than a lot of those guys at this point. It's really hard for me to tell you guys what you should do unless you're attempting to model me. I mean, you guys all do vastly different shit. Um, and that's fine. In the end, you guys are all going to be doing vastly different shit. What resonates with you, man? Does something really resonate with you? Does something you're doing like, does it feel right? Like, is what you're doing, does it just like, it seems like the right path? Because what you guys have to understand is you're panning for gold, and the amount of dirt material you got to remove to get a couple of ounces of gold is so much. And when you're going through material, I mean, you guys are gambling for a living or trying to, so you're going to have to gamble on just reading these books. And you might find a little bit, there could be one paragraph that was gold and that could pivot your trading from this point forward. That would be worth it, that one paragraph. And most materials is just going to have a little bit of something in it. But each of you are going to see, some of you could read something and get a lot from it, and some of you could get nothing from it, and some of you could get a little. So it depends on who you are. I couldn't tell you, man. Isn't a reclaim just a pullback? It's more of a violent move. And some of these are older comments. Oh, the voices from God shit. Hey man, I do like ecstatic dances and meditate, so um I don't know. I think he's a funny from what he seems like he's a funny character. I know people love to hate on Jim Cramer, but I would like to hang out with Jim Cramer because I think he would be a great guy to fucking bullshit with. I know you guys get love to hate on that, but you know that motherfucker would be fun to hang out with. So I'm just saying. Um, Thanks for streaming. Most educational videos. I've learned so much from you. Best wishes. Same goes for a question like this. All right, I think that's everything. All right, guys. Well, I will see you when I see you. That was a 2-hour deal.